What if I told you that a country once mocked for currency struggles is now shocking the entire world? Not once, but twice. First, Ghana's cedi was ranked among the strongest currencies in the world. It now ranks alongside high performers such as the Rubian ruble, Swedish krona, Norwegian krone, Swiss franc, euro, and British pound. And now, the Bank of Ghana has just dropped another bombshell. Ghana's trade surplus has hit a staggering 6.2 billion US dollars in just the first 8 months of 2025. This isn't just numbers on paper, it is a story of resilience, bold reforms, and a nation rewriting its global economic reputation. But the question is, how did Ghana pull this off? And what does this mean for ordinary Ghanaians? Stay with me because what is coming up will shock you and change how you think about Ghana's economy. This is First Africa Voice, where we tell Africa stories, raw, real, and without filters. Ladies and gentlemen, welcome to the channel. My name is Paul Lingua. Now, let's dive into the story and break it down together. According to the Bank of Ghana governor, Ghana recorded 6.2 billion US dollar trade surplus between January and August 2025. According to the central bank, this is based on strong gold export and higher cocoa receipts. That simply means Ghana exported far more goods than it imported, a big shift for a country that not too long ago was struggling with trade deficit, high inflation, and currency depreciation. For a nation that many international critics had written off in 2024, this is nothing short of remarkable. But here is the twist. The surplus comes barely months after Ghana's cedi was named one of the strongest performing currencies in the world. Is Ghana turning a corner for gold, or is this just temporary relief? Why this matters, a trade surplus of this scale, 6.2 billion US dollars, means more foreign exchange reserves, which helps stabilize the cedi further, stronger investor confidence, making Ghana more attractive for global capital, and crucially, it eases pressure on the government to borrow externally. This could mean more money staying in Ghana to build roads, schools, and hospitals if well managed. But this is not just economics, it is about national pride, a message to the world that Ghana is not just surviving, it is computing. Bank of Ghana Governor Dr. Johnson Asiema also stated that despite seasonal pressure on the cedi and moderation in remittance inflows in recent weeks, the country's international gross reserves stood at 10.7 billion US dollars in August, covering approximately 4.5 months of imports. On the cedi, he argued that the local currency remains among the strongest globally year to date, having appreciated by about 21% as of September 12, 2025. It now ranks alongside high performers such as the Russian ruble, Swedish krona, Norwegian krone, Swiss franc, euro, and British pound. This outperformance reflects prudent monetary policy, effective liquidity management, fiscal consolidation, and increased foreign exchange inflows, the governor said. The governor of the Bank of Ghana has, however, assured the public that the banking sector remains stable and improving, with the capital adequacy ratio rising to 19.5% in July 2025. Now, let's listen to him speak at the 126th Monetary Policy Committee meeting on 15 September 2025.
Ghana's recovery is gaining momentum even as the global environment remains uncertain. Worldwide, growth is easing and financial conditions are still tight. Amid trade tensions and geopolitical risks, yet domestically, improved fundamentals have strengthened confidence in our outlook. Real activity has firmed. Provisional data shows GDP growth accelerated to 6.3% in Q2 of this year, which was led by services and agriculture, with non-oil GDP expanding by 7.8%. Our high-frequency indicators also confirm this momentum. For example, the bank's composite index of economic activity was up 6.1% year-on-year in July, and recent PMI readings, alongside our business and consumer surveys, point to improving sentiments. On the price front, colleagues, headline inflation fell further to 11.5% in August, its lowest since October 2021, and this was supported by a tight monetary stance, the fiscal consolidation that has been sustained, and better food supplies, as well as core measures and expectations that also continue to re-anchor. Colleagues, external buffers have strengthened, and for the first 8 months of the year, Ghana recorded a trade surplus of $6.2 billion US, underpinned by robust gold exports and higher cocoa receipts. Our gross international reserves stood at $10.7 billion in August, covering about 4.5 months of imports. Despite seasonal pressures and a moderation in remittance inflows in recent weeks, the cedi remains among the strongest currencies globally year to date, appreciating by about 21% as of September 12th. The cedi now ranks alongside high performers such as the Russian ruble, the Swedish krona, the Norwegian krone, the Swiss franc, the euro, and the British pound. This outperformance reflects prudent monetary policy. It also reflects effective liquidity management at the central bank. It reflects fiscal consolidation, and it also reflects increased foreign exchange inflows. Now, the banking sector remains stable and improving also, with the capital adequacy ratio, that is without reliefs, rising to 19.5% in July, while NPLs remain elevated at 21.7%. They drop to 8.4% when fully provisioned losses are excluded. And this underscores ongoing resilience as recapitalization and strict underwriting continues. On the fiscal side, colleagues, execution in the first half of 2025 signaled consolidation. The deficit on commitment basis was contained at 0.7% of GDP, below target, contributing, together with cedi strength and external restructuring, to a decline in the public debt ratio by mid-year. Against this backdrop of easing inflation pressures, anchored expectations, and stronger buffers, the MPC in July, as you will recall, reduced the policy rate by 300 basis points to 25.0%, while reiterating our readiness to adjust as the disinflation process evolves and risks such as global trade disruptions or prospective utility tariff adjustments are assessed. Colleagues, our commitment remains firm, and these are to maintain price stability, to safeguard financial stability, and to create the conditions for inclusive and sustainable growth.
So, is Ghana now on the path of becoming West Africa's true economic powerhouse? Or are there heavy challenges waiting to strike back? The bigger picture, experts warn that while the trade surplus is impressive, challenges remain undoubtedly. Global commodities prices are volatile. Domestic production still relies heavily on imports for inputs, and debt servicing still hangs over the economy. But even with these realities, one thing is clear: Ghana has shocked the world again. So what do you think? Can Ghana sustain this momentum and truly build a resilient economy? Or is this a short-term victory in a long economic battle. Far as there are more men on earth, definitely there are more on opinion. So drop your thought in the comment sections below. Let's hear your voice because your interaction will let this video reach large audience. And if you found this video eye-opening, make sure you like, share, subscribe, and turn on the notification bell, because here we tell Africa's story the way it should be told. This is First Africa Voice, telling Africa's stories with bold truth. Well, the dew of the day has kept upon our thoughts, and nature must obey its necessity. Here is where we bring down the curtains. Until we meet again, my name is Paul Lingua, the Africa Orator.